Do you have what it takes to be a successful trader? Hello and welcome to this week's Australian Share Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing if you have what it takes to be a successful trader, the All Ordinaries Index and some interesting stocks on the market right now. Before we jump into the report, I'd just like to mention if you have any thoughts on investing or trading, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into the report. It said that 80% of traders lose, 10% break even and only 10% profit over the medium to longer term. So that begs the question, do you have what it takes to be part of that 10% who consistently profit? Now, every week I come across a range of traders with different styles and approaches to their trading, and it's no surprise that most of them don't make a profit. And worse, after chatting with them, I find that for the most part, with the way they approach things, they have very little chance of successfully making money. Now, it does not matter whether someone is a beginner or an experienced trader. There are a few common characteristics that I find amongst those who are highly likely to be successful. Now first, let me get rid of the elephant in the room. Just because there's lots of free information about trading on the web, it does not mean what you find is any good. And just because you look at the information there, it does not mean that you'll magically become a trader from it. Remember, you will always get what you pay for. And so if you want to find out what the 90% who are not profitable do, then keep surfing the web because this is where they live. Now, there's a common misbelief out there that trading is highly technical, difficult, and not for the faint-hearted. This misbelief often keeps people from trading. However, nothing could be further from the truth. It is not hard to learn to trade. You just need to have a desire to put in the required effort. I'd like to mention a quote, and I want you to consider it thoroughly. Nothing worth having comes free. Like anything worth doing, being armed with the right attitude and the right education will ensure you can be successful. Now, when it comes to trading, if you have the right attitude, it will mean you are willing to put in the work to gain the knowledge of the 10%. So here's a list of things you must do to be part of the 10% of traders who succeed. Firstly, be honest with yourself. There's an old saying, what a wise man does in the beginning, a fool does in the end. When I ask people about their trading process and what rules they use, I find that so many have followed the path of the 90% and few of them see their own mistakes. Next, get a good education. If you trade without the right knowledge, the market will eventually take your money, and your education will become quite expensive. Taking shortcuts in your education means you'll end up taking higher risks than you need. Next, develop a solid trading plan. The 90% who fail to properly plan. They have missed or ignored this critical step because they either don't have the right knowledge or they don't think they need a plan. Both fall under the heading of living in the hope of getting it right, or what I like to call, they practice the buy and pray method of trading. It's plain simple. If you do not know that you'll have a high probability of success, why would you trade your hard-earned money? Next, get committed. Having the right attitude when it comes to trading successfully is critical. Be clear about what you want to achieve, why you want to do it, and then commit to it. A successful trader commits time and money to developing the right knowledge, skills, and gaining the experience in the market. Shortcutting yourself here leads to poor results. Lastly, get started now. It's all well and good talking the talk and waiting for something to happen. However, if you're not willing to walk the walk, it's worthless to you. Procrastination is the enemy of success. The more you procrastinate, the more likely you won't get around to it. You have to be willing to take the first step and get started. Remember, what a wise man does in the start, a fool does in the end. Getting started may seem daunting in the beginning, but like every challenge, it will be worth it in the long run. Most importantly, it doesn't all need to happen right away. Everyone takes a different amount of time. The crucial thing is to get started or it won't happen. So it's your choice. Do you want to be one of the 90% or the 10%? To be part of the 10%, you need to be different to the masses. Now, being different means you'll have the foundations to be a great trader. So let's get into the charts. Okay, let's get into the charts now. Today's recording is going to be a little bit different because I'm actually not in my normal studio. I'm actually in Sydney. I'm doing some meeting some journalists and doing some presentations here for a couple of days. So the sound's going to be a little bit different, but the content's going to be great as per normal. Just before I get into the whole thing, I just want to talk about the sectors of the market for the financial year and what they've done. And we start off with energy at 38.2% growth for the financial year. We're going to look at some energy stocks in a minute. Information technology 29.5%, healthcare 25.4%, materials 25.2%. Consumer staples 24.1%, consumer discretionary 11.4%. So some really good gains there on some of those sectors, and some of those stocks like your BHPs, your Rios, those sorts of stocks have done really well. Some of the healthcare stocks have done excellent over the financial year. As I said, consumer discretionary 11.4, a little bit lower. Then we get down into industrials at 3.1, financials at a minus 3.9. That's all your banks and your finance companies. Utilities minus 5.7, and telcos, no surprise there, at minus 34.9, with Telstra being the dog stock of that sector. So interestingly, this market, this calendar year from 1 January really has only done 1 or 2%. It's done very, very little. So most of those gains happened prior to the 1st of January 2018. So because the market hasn't been doing quite well, and it's not unusual for stocks or markets to move for a period of time and then fall back or slow down, and it's like a train going from point A to point B. Sometimes it'll be going fast, sometimes it will be slowing down and stopping, but eventually it'll get to point B. So looking at the charts right now, we've got the All Ordinaries Index on the screen right now. And as you can see here, we've had a little bit of an inside week from last week, so the week ending 29th of June to finish out the financial year, closing at 6289.7 points. I remember talking about it last week, saying, with this nice strong rise up, we may get 1 or 2 weeks down. We got an inside bar last week, which did open higher. As you can see, it was open where my pointer is and closed a little bit lower. Don't be surprised if we get 1 week down in here. At the moment, I wouldn't surprise me if we got another week up, but don't be surprised if we got 1 week down here. And what I'm thinking could be happening, and if I just drag my little pointer down here, you can see here how my target of 64, let me get it down here, 64042 to 6581, there's my target for this current move. So if I put a nice click, this could be what will actually happen, somewhere in the vicinity of doing something like that. Oop, my arrow sort of went, and the fans come on my computer making a little bit of noise, so please excuse that. But that's what I'm thinking. It's probably going to happen. We might get 1 week down or 2 weeks down before it starts to move up. That gives you a bit of a breather, but also gives you a chance to look at some really, really great stocks. So let's look at the energy stocks at the moment. I've got Woodside here at this point in time. I had a bit of a play with this. Looking at this, I want to look at Origin and Santos. You can see here how this had a nice steady rise up from that April 2016 low at whatever that was, 23.51, up to put my pointer on there, to 33.52 in 2017. So it's not a bad little run in 12 months. It's a really, really nice run, but since then it's really volatile. Now it's breaking through this sort of level here at that $34.40. I think there's some nice upside here. Don't be surprised if you don't see 1 or 2 weeks down here. And as you can see, I've got my price projection from here. It's 23rd of February at the low of 28.38. It's risen nearly 25% since February this year, so it's done very, very, very well. We might get 1 or 2 weeks down on this before it takes off again. Now let's look at Origin. Origin's a different story. It's been running again since early 2016, like the other telcos, but you can see here how it's really travelled all around this green line that I've drawn up here, right through to that $9.78. And now it's folding over. It's slowed right down. That's what I was talking about before, as the train sometimes slows momentum. And sometimes that's just a consolidation phase before the next boost up. Sometimes it's just tipping over, like a seesaw or a swing where it's just tipping over and it might fall away. I don't think it's going to fall away. I think it's going to just start to take off again, and we'll get a few more percent out of that. It might even get up another 20, 25, 30% from here. At this point in time, just sit back and wait and see what actually happens. The next one I want to do in the Australian market is Santos, and again you can see here
It's been really hard hit all the way down into early 2016 like the other stocks. And it's moved up from a low of $2.46 through to the recent high here at $6.46 in May. Since then, it's dropped off a couple of weeks, and now it's starting to move up again. So if I just expand that up for you a little bit, so we can see a little bit about what it's doing. See, it's gappy. It's very good stock if you want to get in on the right time. If I put my little tool on here and click, you can see here how it can run pretty to basically to June 2018, nearly 125%. So it can run pretty hard if you do get it. So I'd be looking at this stock. I think there's some more run in this stock at the moment as well. I do like that energy sector. I still think there's more in the whole energy sector, even though it ran quite hard last financial year. Don't expect it to run as hard in the next financial year. Generally, the top performing sectors in 1 year generally don't get to do it more than 1 year. They tend to slow down a little bit, and that flips around. So I always look at the worst performing sectors too, because that's where your opportunities come from. Remember, Buffett says buying doom, selling boom. So look at the doomy ones, which are, you're looking, as I said, telcos, and you're looking at consumer. Consumer staples didn't do very well. I'm trying to remember them off the top of my head at the moment, but look at some of those sectors that didn't do very well. That's it for me here in Sydney. Good luck, good trading, and have a great week. Take care.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.